Hello and welcome. You're watching Business Plus. It was a bumper fiscal year for India. From record exports to GST accruals, UPI transactions to toll collection, India has broken records on multiple pillars of economic progress. We will be analyzing these broad points to plot India's macro growth story. Joining me is my colleague Rakesh. Also joining us is Ashwini Mahajan, who is an economist. Also with me is Srinath Sridharan. Gentlemen, appreciate you taking time out. I want to begin by all these pillars of growth, Rakesh, from manufacturing to UPI to exports. What do you make of these numbers?
Shweta, good that you have plotted the fiscal story, and we are happy to note that India is fiscally fit. But that's so far so good. We don't know what's going to hit next because we live in an interconnected world, and the external shocks, we're not insulated from that. And we've seen it this morning only when the OPEC oil price decision came, which we'll discuss at length a little later. We just can't remain isolated. But yes, on the core fundamental matrices, India has really done well, from exports to GST to the various pillars that you mentioned in your intro. I think we've really done well.
Okay.
How have we done well? I'll just come to that. I'll just outline 5 pieces for that. I think I have a 5P theory. First P is, what we call public investment. Second is what we call, public consumption, which is the story about autos being bought and, or the number of. And third is what we call private consumption. Fourth is public digital goods. And fifth is the most important one, which especially in the recent past has come to play, is the prudent regulatory ecosystem that we have in India. These 5 Ps have driven the India macro story, and we are happy to note that they're there for us to have this discussion today. Going forward, we'll discuss further what are the challenges.
Okay, let's talk about manufacturing sector. India's manufacturing sector displayed quick expansion in March due to increased productivity and new orders, and in fact jumped to 3-month high. The S&P Global Purchasing Managers Index, which is PMI, came in at 56.4, up from 55.3 in the month of February. This, according to data, of course, released today. As far as exports is concerned, and we discussed this extensively, India's exports collectively, goods and services, crossed $750 billion mark, first time in history. And this has resulted in, of course, current account deficit, which is the difference between the inflow and outflow of foreign exchange, narrowing to $18.2 billion, which is 2.2% of the GDP in October to December quarter, which is, as of December, not the latest data, but that's an encouraging data, Rakesh. Also joining us at this point in time is Professor Ashwini Kumar. Ashwini, coming to you first, how do you read these developments? Rakesh here pointed at the 5 Ps or 4 Ps of development. These are the pillars on which India is growing. But what do you make of the overall macro picture on the basis of the current account deficit, which is narrowing at the moment? We're doing well on the export front and so on.
See, overall economic picture, macroeconomic picture is very encouraging. For the last so many months, consistently our PMI has been improving, and it is all-time high at 56.4 right now. Basically, the globe, all the countries all over the globe, they have been facing the problem of input inflation, which is now cooled down. And future is also looking brighter, in the sense that we are expecting 6.9% growth, and demand is also coming up very well. If we look at the demand for automobiles, there is a queue of about 4 to 5, 6 months for all the cars. And so all demand is there, orders are there. So the manufacturers only have to manufacture those products. If we look at the export side, and we reached approximately $676 billion of exports last year, reaching to $750 billion exports this time. So this is the most encouraging thing. And those who were saying that it is very is not an achievable target for $2 trillion of exports by 2030. It looks like, it is an underestimate now. We can even go further. GST collection this year consistently
Professor Mahajan,
for the
I will
last
come to GST
the
in just a while. I will come to GST in just a while. But Srinath Sridharan is also with us, and I want to take a question up for him at this point in time. Srinath, you heard, Rakesh speaking. You heard Professor Mahajan speaking there. I want to ask you, the target, of course, of the exports is to reach $2 trillion dollars in the next couple of years. How achievable is that target, and how hopeful are you with these numbers?
See, I think there's been nearly 25% growth year on year with the current exports of services, software, business, and travel. Sustainable question mark. Today, let's look at software. There has been a slowdown in large ticket size orders from the Western markets, which are the prime clients for our software industry. Are they sustainable? Probably yes, in the short term. Long term, we will have to see. Business exports, I think services exports and business export will grow. Travel services, not too sure. We still seem to be a little volatile. But what has also helped very largely, we are forgetting the inward remittances from non-resident Indians has dramatically increased by over 30%. And that's a big chunk of this entire calculation of the difference in the imports and the exports. So exports, I think short term, definitely yes. Long term, I'm not too sure how sustainable this growth, this kind of large number it will be. And what are we going to export that the world would say that, hey, I want to grow, pick it up from India? That's a question mark. Two, we cannot be only depending on, according to me, the services economy for a large number of time. We will have to look at manufacturing as well, but we have the heft. I have a question mark. Travel, yes. The digital public goods, as Rakesh alluded to, phenomenal. But can we actually use that as one of the services that we can export and make money off it? I think so. I think we're underestimating the potential of Indian digital public goods.
Ashwini ji, I have a question for you. Then I'll come to Sridhar. Thank you for joining us on the show. Now that we are comfortably placed, are we in a position to launch the second phase of reforms in the country? And that's one question I have for you in terms of going after big ticket privatization. Second is that unemployment and inflation remain two core issues, and we're getting into an election year. Do you think the government is seized of the opportunity and the challenges there, and will they gloss over the core economic macro fundamentals in terms of issues for the election?
See, looking at the employment issue, you will appreciate that all over the globe, the companies are shedding jobs now, and it is only in India where these companies are also not able to reduce jobs because of the expanding markets. To that, they are not able to reduce the jobs to that extent. But the kind of growth pattern we have adopted, going in for the one district, one product, more concentration towards the labor-intensive technology and the labor-intensive commodities being produced. So employment definitely will be the gainer in this whole issue.
But these are good ideas. These are good ideas, sir. But they are very medium term and long term. In the short term, unemployment is a challenge, and it's bound to become an election issue. Any short term ideas that you have for the government to mitigate that challenge?
See, that's what I'm saying. That even in the short term, the kind of production linked incentive schemes and other schemes which the government is bringing in, and the one district, one product is not a long term scheme. It is also going to help us in the short run as well. And one thing more important is that the kind of aspirations of the people, they are going towards more towards entrepreneurship, now less people are seeking jobs. They are trying to build their own startups and new enterprises. So this is one. You asked first question. I forgot that.
The other question was on, now that we are comfortably placed in terms of the macros, are we in a position to launch some big ticket reform process?
Yeah, that in fact.
I mean, we had Air India privatization in these 9 years. Do we expect some big ticket privatization?
That's what I'm coming to that point. You see, I'm a great critic of these so-called reforms. You see, reforms are not always the kind of reforms we are talking about. The next question you will ask is the labor reforms and the land reforms. These are the only reforms on the cards of some economists.
Are you unhappy that Air India has been divested?
Because,
Are you unhappy that Air India has been privatized?
Pardon?
Are you unhappy that Air India has been privatized?
Yeah, Air India, you see, we were against Air India privatization for the simple reason that at that point of time it was being sold to the foreigners, and there was an issue of security concerns were there. When you are, Tata is as good as the public sector. So
that's an interesting. They may not like that, but anyway, Sridhar, I'm coming to you. The fundamental questions remain, Sridhar. Do you think now that we are comfortably placed in terms of the macros, the fiscal is closed on some big, good, interesting numbers, is there room in election year for some big ticket reforms? Ashwini ji doesn't call them reforms. He's not happy with that term. And, but as an independent observer of Indian economy and Indian polity, in election year, do you think there is room to do that, or we can, silently hope that nothing is going to happen for the next 20 months on that till the new government comes in?
See, I think reforms is a state of mind, right? I mean, we have to keep moving along. The world is we live in a very volatile world. It's very nice to bucket it in that VUCA world. But the reality is something or the other is impacting us. It could be geopolitical tailwinds. And also, I would not start celebrating just because we have had a lower CAD so far. I mean, that's not necessarily the only indicator for a healthy economy. What about factors like inflation? I mean, we have the MPC meet happening this week. We would know what is the next mood on the rate hike or decrease. What about the GDP growth? Is it sustainable? Our unemployment numbers have been a little high. So if we take all this into factor, we still can't say, hey, let's start celebrating. We are in a great economic high. Having said that, it's like saying other economies are in a very bad shape. They're far better. Yes, we are. But we also have 140 crore people, and finding jobs and employment or livelihood for them is a struggle. So every percentage of the 140 crore is a large number. It's probably larger than some of the smaller European countries in terms of total population. So from that point of view, it's not just about reforms. We will have to be, I think, very, very simple, contemporarize. I mean, in the current skilling world, our skilling, especially in manufacturing, completely outdated. I mean, we can't compete with Vietnam, forget China. We think we are efficient and productive. We can have great PLI schemes, but you have heart-to-heart conversation with the manufacturing entrepreneurs. You know you're far inefficient in terms of productivity for labor. So how do we build those? Some of the small ones that we started last year with the RAMP program for MSME, great numbers, but I think it's a very, very small number of 5,000 crore allotted. Can we really turn the needle there? Is there reforms possible? I think in each of the sector. We have still not touched agriculture at all. It's a holy grail that we have. We'll have to talk about agriculture reforms. While we have been able to dismantle one of the supply chain one, our farmers still seemingly don't get the actual value for their produce. So what can we do efficiently? Can we do a agri-tech digital public goods for agriculture? Completely disrupt that, so that the farmers actually benefit. We still haven't touched that. I think if you look at manufacturing, still a long way. Taxation, we have not been able to widen the tax base at all. But I'm hopeful that with the current digitization and the digital sciences that CBDT has brought in, both for indirect and direct taxes, some of those could change in the near term. And again, our states, if you look at the bottom 10 states, they're as incompetitive and probably a welfare state. Their debt is so high and they're not worried. So what is it that the central government or probably the RBI can do in nudging them to start looking at, apart from sin taxes, right? They literally survive on alcohol and tobacco sales. About 8 states have the second highest contribution of revenues is actually from sin industries. Can we move out of that and start making each of the states as competitive? Why do I say that? Some of the population size as well as in some of those states are as large as some of the European countries. And how do we make them self-sufficient and compete for every single resource from a global competitor? So from India, we will have to then start breaking into micro, saying that how do we make each of our state competitive? So I think call it reform, call it change, call it gearing up for the future. Can we be a little insecure? I think from policy point of view, I would like a little bit of insecurity to creep into the planning, saying that let's feel insecure. How do we manage to keep 140 crore people fed, clothed, and safe from public health perspective? And I think we have a long way to go.
Okay, interesting take there, Srinath. Stay with us. Ashwini, please stay with us. Another interesting story that we're tracking, and we've moved away from the macro pillars. We'll come back to that in just a bit. But oil prices today surged after OPEC unexpectedly announced crude production cuts to the tune of 1.1 million barrels per day. The move has delivered a fresh inflationary jolt to the world economy. We don't know what the impact on India will be. We'll come to that. The move is seen to have been taken in face of weakening demand. International oil benchmark Brent crude rose as much as 8.4% to a high of $86.44 a barrel in early Asian trading on Monday. Brent and WTI later paired their gains to be up by 5.4% at 84.17 and 5.4% higher at 79.78 $1 per barrel respectively. The sharp gains for crude came after Saudi Arabia announced that it would implement a voluntary cut of just under 5% of its output, which is about 500,000 barrels per day, in coordination with some other OPEC and non-OPEC countries. Russia, a member of OPEC Plus, also said it would extend its existing production cut of 500,000 barrels a day until the end of the year. The move has brought concerns around inflationary pressures back to the fore, adding to worries that higher prices and an aggressive monetary tightening by central bank could tip the global economy into recession. Srikanth continues to be with us. Rakesh is here with me. Rakesh, this looks like a sudden move and it is unexpected, not something that we were hoping for.
Exactly, this has completely come as a bolt, and as I said right in the beginning, we live in a world where we're absolutely connected to the external environment, and oil is so important to us for our economy to not only sustain and grow. So we will have to really see what the impact of it is. It's absolutely unexpected. So when we look at the fiscal performance of the year that has just gone by, we'll have to absolutely factor in these challenges which are known and unknown. So this has come absolutely as an unknown. We were very happy with the oil being a little benign in terms of its pricing. We had done a good deal with Russia. But going forward, how it pans out, the petropolitics, the petroeconomics. Now, the US wanted production to go up. What has happened is that it has gone down. And so this is an additional challenge, especially in terms of the inflation. As I pointed out, and you also pointed out, Shri, and our experts also agree, that inflation is going to be a key issue for India as well. I would request our experts to weigh in on that and look at the immediate impact of the oil shock.
Srikanth, the White House, as Rakesh said, has described this as an ill-advised decision under the current market conditions. It was, of course, hoping that the production will go up. That hasn't happened. In fact, it's gone down. What's the immediate impact on the world market, and what would be the percolated impact on Indian market?
So I think the first thing that we're going to see is the US Treasury bills, the yields are going to go higher, which is going to have a cascading effect of how do foreign investors look at investing into markets like India, be it our debt markets or stock markets. So we could see some action there. Two, I think, will we see a knee-jerk reaction from Russia just to hold on to its existing clientele? Probably, I think if we leverage our diplomacy, we might be able to get slightly more produced than what we are today. But mind you, 85% of our total oil produced is import. So Russia alone won't be able to supply that. We will have to depend on Saudi. And Saudi, I think, OPEC has made a very, very smart move. They played brilliantly on the fundamentals of economics, right? Supply and demand. By just tweaking the production, they're able to get better value for their own buck. And it is expected. They've been waiting very patiently for all this while in the Russia-Ukraine war. It has not happened. We're also going to see, I think, some of the huge inflationary pressures. The CAD again, the next quarter, the CAD will go up then. It won't be as low as this. Will we have the same sentiment in terms of consumption? Mind you, we're just entering summer and our peak power consumption is going to increase. How do we play that out? Two, also, we are going to get into the next question about how good the monsoon this year is going to be, which means from the perspective of the farm produce and the consumption sentiment. Too early to predict. And that's why, as I said earlier, I mean, I would not rejoice and start celebrating right away that the CAD is down. There are concerns with this kind of pricing. We just need to keep our ACs running, I mean, for the next five months across India. And that's a challenge that we will have with increasing oil price.
Okay. Particularly with respect to India, how far can we see the price hike going? Are we better placed as compared to the rest of the world?
Again, better placed with some parts of the country, some parts of the globe, definitely yes. But the other way of looking at it is, if we have to translate it, we are still in the transition from the fossil fuel to the green transition. It's a long way to go. So right from our public transport to the private vehicles, we still are consuming fossil fuel, petrol and diesel. So the bill will impact us in the short term. We really don't see citizenry benefit where we say that, hey, listen, oil prices have gone up, so let me stop using my vehicle. We don't do that. I mean, probably a small blip of it. And three, we are just moving into a kind of what I call as the experience economy. Everything we want to experience, be it Swiggy, Zomato, everything is sitting where we are. And that is not going to change, right? I mean, we're just going to consume more and more of everything, services. And everything needs to be powered by something. And that's where my fear is inflation in the short term could go up. And how does it impact our consumption? Again, I think consumption is not going to go down just because oil prices have come up. If it's an impact on food, oil, cooking oil, I think we might see some slowdown of take. Luckily, the festive season is quite some time away. So that's a relief that I would find from this pricing point of view.
Absolutely. Before I let you go, what alternatives do the global economies have in order to keep prices under control at this point in time? Because this is sudden, as we discussed. What alternatives do they have on the table?
I think there is no alternate. I mean, if they can make peace with Russia and solve Russia-Ukraine one, I think we're getting better level playing field. But I think OPEC, being the largest, as Rakesh alluded to, even the US production is not taken off. And I think this is truly the test for the global economies which preach developing nations like India about green transition, right? I mean, how many of them have actually transitioned to green energy, green sources of living? And I think this is a wake-up call for all of us. Forget only the pricing power, but also the real living we will need to transition. Short term, no, I think we're going to continue having pain. The long term, who knows? I think we better learn lessons from these.
Srinath, if you can wait a while, I'll just get Ashwini to respond on this OPEC price rise. Ashwini ji, can you just see the impact that you possibly have in India and globally? What are your assessment of this unprecedented decision?
I think it's not a very wise move on the part of the OPEC countries who have cut down because all over the globe we see a declining trend for the fossil fuels. And the sooner they sell it off, better it is. They have a huge reserve of oil. They should not reduce the production in any way. It's not going to help them in the longer run. Yes, in the short run, they may get some dividend in the form of higher prices, but in the longer run, US is doing a right thing by increasing their production of crude oil. And we will have to look at Russia, how Russia responds. But in any case, we are better placed as compared to the rest of the world, especially the Western world, because we are getting crude oil at much cheaper prices as compared to the West. So the impact will be there on India, but it will be minimal. It will be less than what other countries will face. This is one thing. Second is that future of fossil fuels is bleak in the sense that we are going towards more and more towards the electric vehicles, and I think in the next 2, 3, 4 years we will be shifting at least 50% of our demand to the electric vehicles. So we will have to see, but yes, in the short run, we should be worried about the inflation coming in. But RBI will have to treat a balanced path, in the sense that they should not get swayed away with the inflation targets and other things, because what is important is that we must not get our growth impacted adversely by raising interest rates. We must keep the interest rates at a lower level, because we must give a chance to growth, because all these, whatever is happening, whether it is digital infrastructure or it is the other kind of infrastructure being built, or the more new investments after production linked incentive schemes, and the orders coming in, new kinds of commodities being produced, especially semiconductors and solar panels, and more and more of
So would you advise the RBI governor
India.
not to raise the interest rates next week?
I would say that, because today, if we look at the inflation right now, it is obviously under control as compared to what it was in the previous months. So my advice to the monetary authorities would be to hold it for some time.
Good. Srinath, coming back to the domestic situation, what's your forecast on the rate situation? I mean, you agree with Ashwini ji on RBI not going for a rate hike again, or are you there, or we lost you? No, you're there.
No, I'm there. Yeah. So I mean, while I agree with him in principle, but I think the reality is RBI does have another KPI, right? I mean, or KRA. Their KRA is also being the debt manager for the government of India. And government of India has not diversified sources of borrowing. I mean, nearly 45% of the entire Indian domestic market gets swept away by government of India. If only they diversify that, which means that the rest of the corporates or the retail borrowers in India would have access to that. So I think from the long-term perspective, we will have to relook at our entire banking sector. Indian banking sector is one of the few where we actually lend to the government and the corporate borrowers. Whereas in the Western world, the banking sector actually lends to retail, individual, and MSME and SME borrowers, while the corporates have the bond market. Here, that's completely warped. And I think over a point that need calls for a structural change where the government and the corporates go to the bond market and tap into it, while banking allows for the growth in the actual grassroots economy. So here, it's a flip side where under the name of priority sector lending, we have kind of bucketed the growth and limited the growth. And I hope that we'll take care of it. Short term, I think RBI won't have an option but to look at rate hike to balance inflation, to balance availability of debt. I think that's a challenge they will face this week.
Last question before we let you go. This entire issue about private sector kept, not investment not perking up. The finance minister has made a public appeal. Even the prime minister has indirectly been talking about it. Now the election year is there. There's one view that they'll be even more cautious. What requires to really perk up private sector investment, which is linked to jobs, which is linked to manufacturing, which is linked to overall investment, climate being, in the right quotient?
So I think while all of those are fundamentally there, if I were a business, if you look at the top Indian businesses, they've diversified into not just India being their domestic market or earning market. They've also started going abroad. I mean, these are multinationals which are Indian in nature, but based out of India, but they're multinational. Some of them have over 50% of their revenues and profits coming from global markets. I think in a for-profit enterprise, it's a compulsion, economic compulsion for them to de-risk and de-grow. If, let's say, European market is going to throw tax breaks and incentives for them to attract their investments, they will. And India, they know the volumes are there, but the pricing is still not available. So we will have to look at India not just as investment or consumption market, but also as an investment market. And here, I think, which is why I said earlier, the states have to compete in offering the right investment climate, the right breaks. It's not about giving land free or just giving tax break free. How efficient and ease of doing business, how quickly can they go? I think that's a reality.
Okay.
I think this year, the Indian businesses will still continue shopping for M&A globally. Why should they not? I mean, if they're going to buy assets for cheap, for free, almost for free, and if they can use their rupee to do that, I think they will be far more pragmatic. And I think that their stock market valuations will increase because of that, not because they opened one more factory in India. And that's a reality that for-profit enterprises face.
Srinath, my apologies, I'll have to cut you there. I think we're running short on time, but appreciate you joining us with your inputs. We're going to shift focus for now. GST collections in March grew by 13% to the second highest ever of 1.60 lakh crore. This is the second highest monthly mop-up since the rollout of the indirect taxation regime in July of 2017, and is only behind the 1.68 lakh crore collection which was recorded in the April last year. So we are at a second all-time high here. The total gross collection for the entire fiscal year of 23 stands at about 18.10 lakh crore rupees, which is 22% higher than the previous year. Now, on the direct tax collection front, between April 1st, 2022 to February 10th, 2023, about 11 months, it rose by about 24% to 15.67 lakh crore, according to Finance Ministry. The data just came out, 2 days ago, which is 1st of April. After adjusting the refunds, the net direct tax collection was recorded at 12.98 lakh crore, which is 18% higher than the net collection for the corresponding period last year. So, Rakesh, we're seeing a jump here in the GST, the direct and the indirect collections both. How does this augur for the sitting government?
I mean, it's a great story for India. Actually, GST is one combined political will, on play. GST happened with a lot of shortcomings, and then it also happened with a lot of political brinkmanship. But finally, it's here, and it's here to stay and grow. So I think GST, without doubt, across political spectrum, is being celebrated as a success story. My worry is that, we expect another round of reforms in GST, which has not happened. And I don't think that happening next year until the new government comes in 2024. Why? That's about rationalization of tariff structures. There's a huge demand from states which are equal stakeholders in the GST administration about bringing about changes in the structure, which has been discussed, debated, but not closed in. And I don't think, before the elections are announced for the Lok Sabha, we'll have any concrete view on that. Yes, the good point is that compliance in the latest round has been very good. That's thanks to the technology, the GSTN as it's called. That particular edifice has come out very, very strongly. So that's the good news. But the next phase of reforms in terms of tariff structure being relooked at as per the demands of the state and other stakeholders, I think that has to wait.
Okay. Now, on the direct taxation front, then tax collection has been clocked in at about 12.98 lakh crore as of February, which is almost 91% of the total budget estimates. Do you think we're going to meet our targets for this year? Or have we met our targets for
these numbers? Yeah, these numbers, will take time to finally settle down. And as we call, the budget is B, then there is RE, then there is BE. Budget is budgeted numbers, then there are revised estimates. Then there are budgeted revised estimates. So these numbers keep going through a labyrinth of nomenclatures. But I think by and large, we are on trajectory. But the bigger point is about what Shweta also mentioned. We need to increase our tax base, which is very, very low. Just about 6.7 crore people paying tax versus 140 crore people. That has to increase, that has to expand if really our taxation structure has to improve. There are good directionally we're on the right track, but the base has to significantly upped, then only we'll have the optimum results.
Okay. About 6.7 crore people paying tax is a testament to the fact that more needs to be done as far as extending the tax net is concerned, Rakesh. We have done, I know there's been an uptick there, but not enough.
Absolutely. One way is to regret so many people being out of it. I've constantly been arguing for agriculture also being brought in the tax ambit, but it's a politically sensitive issue. But that does not, take us away from actually canvassing for creating the right template for bringing in more and more stakeholders into the tax administration system and expanding the base at the bottom. I mean, the salaried guys automatically had to pay tax. We'll have to look at ways and means where actually, TDS is deducted for all those who are eligible, like it's done for salaried employees, whether in the private sector or in the government jobs. Okay. We've not been able to do that automatically.
Okay. I think more needs to be done there, but we're going to move on now to another important facet of development that we're tracking, which is the defense exports, which are also skyrocketing, by the way. They reached an all-time high of 15,920 crores, which is 15,920 crores in financial year 2022 and 23. Now, India's defense exports in 21-22 were 12,814. So there's been an upward, margin of about 3,000 crores. Enough to say that we're doing really well in the defense sector?
Well, in the short term, this is something again which should cheer us. But we'll have to look at the big picture. Shweta, let me just fill you in on the overall export scenario. We're looking at 750 or 760 billion, closure for the last fiscal for India's overall exports. But the good news is that we've done well by getting into service exports as well. So those are the pluses. We've brought into defense exports, which is a new area. It's an area which has tremendous potential. But just to put it in context, the overall export numbers last year in the calendar, not for the fiscal, were 36 trillion. And we are 1/4 of a trillion.
Okay.
So that helps us put the entire export scenario in context. We have a long, long way to go. It's good that we were known as the largest, among the largest, arms importer. Now we are trying to reverse that paradigm. We are also getting into the Make in India mold, using that lever to ultimately try and create a base for Make in India defense equipment to go abroad. And 17,000 crores is a small number, or whatever, 15,920, estimated to be about 16,000 crores. But the direction again here is right. It's a good beginning. We have to really identify markets where there is need for the equipment that we produce, and the good manufacturing practices should define India, the Made in India brand, when it comes to all export products that we send out from here.
Okay. Just to apprise our viewers at this point in time, the government has targeted manufacturing defense hardware worth 1.7 lakh crore, and exports are to be pegged at 35,000 crores for 24-25, which is literally double of what we're doing at the moment. We are, of course, trying to figure out how well we are doing in the consumption front, the export front. But coming to domestic consumer consumption, which is again an interesting facet of the macroeconomy that we're tracking here. Remember, these are broad parameters. We're not talking in depth about the micro parameters, which we did, by the way, just a couple of minutes back. But broadly, on the consumption front, car sales is one way to track consumption, and the sales of passenger vehicle segment witnessed its best performance during the fiscal, with volume of 38 lakh units sold in financial year 23, as Maruti Suzuki India, Hyundai, Tata Motors, Mahindra and Mahindra, Kia India registered record sales in the domestic market, mostly on the back of SUV demand. So there is a rising SUV demand there, but the demand for housing is also increasing pan-India. The housing sector has shown resilience. Overall growth is around 14.2% year on year during the quarter ending March, which is the quarter we just finished. We just let go of, said Tata bye-bye to about a couple of days ago. Now the growth was projected, of course, at 14.2. There is an increase in supply as well, to the tune of about 1.9%. So coming to the consumption, domestic consumption part, Rakesh, I am also told Sandeep Ghosh is joining us at this point in time. I want to come to you first, Rakesh. There is an uptick in consumption as well. What do you make of these numbers here?
Yeah, in my opening remarks, I had mentioned those 5 Ps. One of those was public consumption. So this has been a key driver of India growth story. Last fiscal post-COVID, is a landscape. But there is a limitation to it. Let me look at the good part first. The car numbers, the housing numbers, the mobile phone penetration numbers, the digital data consumption numbers, all those are pointing to a very, very large consumer base asking for ye dil mange more. Okay. But, we must also be little, circumspect and understand that this was quite a bit of it expanded consumer base is because of pent-up demand due to COVID. So are we in a position to sustain this? There is a debate going on in that. I think we can ask Sandeep, what's his view on whether we'll be able to sustain this level of forensic buying across product categories? And also, there is a bit of a question mark on rural economy, rural consumption.
Absolutely. I wanted to come to that, during this course of discussion and to prepare for this discussion, we were also looking, our team was also looking at number as far as FMCG is concerned. And we've seen that domestic demand hasn't really risen. And who are the people who buy SUVs, who buy premium property? They are HNIs or people who are in the upper middle class band. So while the consumption is riding, and this is a question for you, Sandeep, while the consumption is riding, is it particularly focused at rich people, people who fall within the HNI, UHNIs and the upper middle class band, or is it pan-India? What are you making of these numbers?
It was primarily that, Shweta, so far, but I was very encouraged to see the CMI data of last week when they say there is a surge in consumer sentiments in the week ending 26th, I think, and that's about 6.7%. And what's interesting there, they're beginning to, for the first time, see there is a surge in sentiment in the lower income groups and middle income groups. And I think that's most encouraging. The car data is very oft quoted by people, but I take that, as you said, I take it with a pinch of salt because it's really the top strata which is taking the car. And that's been one of the critiques, that when the economic recovery and everything happened, it's the richer people who have benefited, but not so for housing. Although, in housing, people saying low-cost housing demand is yet to pick up, but certainly the middle segment is picking up, and that's why you are seeing a real estate boom. So these are encouraging signs. But ultimately, one of our biggest, the note of caution or rider there would be monsoons again. Rural demand, and they really are linked. And though people don't recognize, through the entire COVID period, we were seen through by a robust rural demand. Monsoons were good, but with that, the injection of money which happened through DBT, the Pradhan Mantri Garib Kalyan Yojana, the free ration and other things, that sustained. So when you saw FMCG sailing through that period, it was that caused it. But the silver lining really is in the infrastructure sector. Government is relentless in pumping in money on infrastructure. You'll find an acceleration happening on the way to 2024, and many of the states going in also for elections at the end of 2023, early 2024. So like today, I think Fadnavis has announced a huge outlay for concrete roads in Maharashtra. Now, the percolating effect of that is high. You're going to see also impact of things like this again, the Pradhan Mantri Awas Yojana, which will be a key focus in this period. These are the things which are going to drive growth. And there I am optimistic with the small rider, as I mentioned, of the monsoon, which none of us can predict, not even the our weather experts. They can't really say, and even if the monsoon happens, the spatial distribution, the timing and all that. Right now, the pre-monsoon showers, they say, have affected in some parts the Rabi crop prospects. So those can happen. But overall, I think, we are far too critical of ourselves. Not only has India done better, but we have shown tremendous resilience. And bigger point is the agility, which our policymakers, especially RBI, has shown. I think that has stood us in good stead, and I am quite optimistic there.
Hi Sandeep, welcome to News 9. Good to have you here. Rakesh here. Do you see, do you see, do you buy this argument that quite a bit of this demand that is witnessed in, growing car sales and housing sales as well, will it sustain? That's the question mark everybody is raising. And second, also on the public investment, the infrastructure massive spending, part of it has been announced in the budget, but, the government would be, so to say, forced to make a politically correct, statement and get into more and more sops for the, voter. Do you see a balance? Do you see both these getting sustained over a period of time in terms of public spending on infrastructure projects? Second, also, how much is... Yeah, go ahead.
No, go ahead. Sorry, I interrupted. See, infrastructure, being in that business myself, I am seeing tremendous traction happening there. If you see in the cement sector, a lot of the companies which are operating in Gujarat have turned out excellent results because of the tremendous boom coming out of this bullet train and the expressway, the Western Corridor. which is happening there. And it's not just that particular thing, whatever happens around it, that is what gives the boost. Similarly, in other parts, there is infrastructure is definitely, there is a relentless push, and there is a lot of central monitoring which is happening over there. So that is there, definitely. Car sales, personally, difficult to predict, but I'm sometimes surprised by the kind of sales which are happening. Who are buying so many cars? But why should they be buying so many cars? But that seems to be the trend. More people, the youngsters, are getting onto cars because of the finances being easily available. Where my worry is, Rakesh, you were talking of earlier on the exports front. See, we always look at exports from the central policies part of it, but our manufacturing exports to take off, the states must play in tandem. If the
Absolutely.
states don't get their act together, make ease of business better, if they are not investor friendly, if they're not able to, so all this China opportunity which we are talking about, those are the places where you miss the boat. And that's why you're seeing traction in defense, because that is, a lot of it is center-led. Services, to that extent, is not really constrained by the bureaucratic structure of the states. But manufacturing exports or manufacture per se, unless our states get into the act, giving up this whole political, whatever fisticuff they keep on having, getting distracted from the actual economic issues, I think there lies our concern.
Okay. Sandeep, I'll come to you in just a bit. Shashi Shekhar Vempati, who's a technocrat, also joining us at this point in time. Shashi, to you, what do you make of the consumption demand? I mean, there's been an uptick here, but we are largely discussing that the uptick has been from a certain section of society, not largely, maybe not driven by the rural India economy. What are you making of the consumption?
Yeah, the data that was shared with me, it looks like the UPI transactions have hit an all-time high, and I think that is a very strong indicator that what we are seeing in the digital economy, for example, is not just the upper class, but it's a far more broad-based growth, which is reflected in the all-time high of UPI transactions.
Coming to UPI, Shashi. And this is interesting, and this is another important parameter, Rakesh, that we're tracking here. India registered more than 83 billion transactions on United Payment Interface, UPI, in the financial year gone by. The final month recorded close to 8.7 billion transactions. So that's 8.7 billion transactions just in the month of March. Now, in April of 2022, at the start of financial year 2023, the average transaction volume per day was approximately 186 million. In the final month, the average volume per day was 280 million. So every day, India is making 280 million transactions on UPI. How happy, excited are you with that number, Shashi?
No, I think it's fantastic because if you recall, the Prime Minister right from 2016 has been talking continuously on creating a cashless society and moving this shift towards a digital India, and I think this is perhaps a very strong data point that that vision and that mission is right on track, and the country continues to be more and more digital. In fact, I would also say that this year, for the first time, you have the IPL being made available free to air on streaming, which again is an indicator that large numbers of citizens, especially rural India, across India, are now digitally enabled, and that's where the advertisers are seeing the audiences.
Okay.
Yeah. Shashi, yeah, Shweta, just a sec. This entire this digital public infrastructure, which India has really done well in establishing it as a global template, we looked at the public policy perspective and celebrated it, as we go along. But what is the economic spin-off? Is it going to unfold in a big way in days to come, or is it we know at UPI, P&L, it's really doing well. We're talking of transporting the idea to a global market. But someone who is looking at this space in a very closed manner, do you see the economic perspective for this emerging as a big driver of the Indian economy going forward, for the private sector as well?
Yeah, in fact, I think we're just scratching the surface with UPI. If you look at the next big thing, it is the account aggregator framework, which allows for consent-based data sharing, which should potentially revolutionize the entire credit sector, right? And it can enable a whole new set of applications which we haven't even conceived right now, perhaps micro lending and so on. So you are potentially looking at the digital public infrastructure now going beyond just the social application to enabling commerce, to enabling lending, and creating an entire new ecosystem around the sharing of data with consent.
Okay. Interesting take there as far as UPI transactions is concerned and India's overall digital prowess. It's growing, it's multiplying. We talked about all the broad parameters. I think, largely to you, Rakesh, at this point in time, that one parameter that we, of course, didn't touch upon was the air traffic, which is also showing an upward sign, expected to continue showing upward sign. What are you making of the overall picture? And this is a macro picture, just for the benefit of our audience. This is not a micro picture. We're not going in depth into all the parameters of economic progress. But on the surface of it, it does look shiny and bright, and I think we're only scratching the surface.
Absolutely. We started the show saying that these are the numbers for the fiscal that has just gone by. And we have concluded that so far so good. India is fiscally fit. Obviously, there are a lot of challenges. As we keep saying, there are global connectivity, which poses known and unknown challenges. Coming to challenges, a question to each, to Shashi and to our friend Sandeep. As we clock in the current financial year, what are the couple of challenges that you see which could probably derail the momentum that we achieved in the last fiscal? Shashi, you first.
Yeah, I think one of the challenges, of course, is the data cost, right? Today I was reading in the Reuters that Indians have one of the highest consumers of mobile data, nearly 17 GB on a per day basis compared to China and the United States. Right, and so you're talking of large volumes of data being consumed on mobile networks, and if those costs go up, of course, that could have a negative effect on this digital growth that we're seeing. So that would be one challenge. Of course, the other is what is happening geopolitically, right, with Ukraine crisis and this sort of new Cold War around technology between China and the United States, around chips and emerging technologies and so on. So these are some of the challenges that I see from a digital growth standpoint for this coming year.
Quickly to you, Sandeep. We're a bit short on time, so quickly to you, what challenges do you foresee? Yes.
Shweta, I was wanting to comment what Shashi mentioned. In terms of the micro lending, the potential of UPI, I don't think has really been, so far what has happened, whether it's UPI or GST, it has formalized the economy. So you're capturing much more of the transaction. But the next level, the next leap forward would be through micro lending, etc., which is somewhere we have been lagging so far, in this whole credit rollout process. I think that's going to be positive. But if I were to look at the risk, I would see from a domestic angle, Shashi has covered the international part of it. One is our whole political instability. As I said before, I hope our politicians focus on the economy rather than get distracted on other issues. And the second bit is certainly I'm keeping my fingers crossed on the monsoons.
All right, gentlemen, interesting discussion there around the challenges that we face, the important parameters of macroeconomy that we continue to track here. All is looking well as we move into a new financial year that's started 2 days ago, but we will of course keep a track of all those broad parameters and keep bringing you daily updates and news stories from the world of business and economy. Thanks very much for watching Business Plus.